Good morning. Welcome to Market Insights for January 13th, 2020. I'm Rick Zeke from Southwest Investments, and joining me as co-host, Bart Shanna. Bart, welcome.
Thank you.
How are you doing this morning?
I'm doing terrific.
Excellent. So, what do we have on deck today to learn about?
Well, we're going to talk about an interesting subject, but first I do want to point out how well the stock market has been doing.
Yeah, of course. Yeah, it's been stellar this year so far.
Absolutely. And if you look at Investor's Almanac, it will point out the historic tie to however the market performs in the first 5 trading days has a very high correlation to how the market ends for the year.
Interesting.
And since we had such a terrific start, one could say from a historical standpoint, odds are very strong this is going to be a good year.
Very good. Well, let's dig into what else we got.
Okay, so the subject of today is the difference between growth and value stocks. So we all know about growth stocks, the famous ones being the FANGs, the Facebook, Apple, Google. You can throw in Netflix. There's a number of others that have been widely recognized and widely held as very profitable trades in the growth arena. However, growth stocks have now been leading the way for about 10 years. As you can see on the chart, and this chart came from the Wall Street Journal, originally from Research Affiliates, what it points out is, and this chart really only goes back to the 70s, but if you look even further back, growth and value tend to perform roughly the same over time. However, there are occasional times when growth will get ahead. We had it in the 1930s, we had it in the 1990s, and now we've had it for about 10 years. And historically what happens is after the shine of growth wears off, value stocks tend to come roaring back. And when they do, they come roaring all the way back.
And it seems to be indicative as far as the growth shoots up just after the value. Is that the way that it works? Value first and then growth? Is that
growth stocks tend to do very well at the beginning of bull markets. Growth stocks tend to do very well when optimism is very high. Value stocks tend to come back when people are more interested in stable and predictable.
Very good. Okay.
And because as humans we go back and forth between high levels of optimism and levels of fear, that kind of explains the growth versus value. Not entirely, because value stocks can be very profitable over time. And I think what we're looking at, and I don't know when the tipping point will come, but watch for value. It'll come roaring back.
Very good. Thank you so much for that, Bart, this morning. That was a valuable piece of insight. And thank you for joining us. We appreciate you coming in and listening to us each week. We look forward to seeing you next week. Thank you so much.